What does the dramatic rise of gold prices and China's push for gold reserves mean for the global economy? Could the growing tension between East and West, particularly China and the United States, lead to a new kind of gold war? In recent years, we've seen the demand for gold from China experience an astonishing surge. But what's driving this sudden increase? And why is China stockpiling gold at such a rapid pace? The answer may lie in a complex mix of geopolitical tensions, economic uncertainty, and the fundamental desire to maintain control over the global financial system. As global tensions continue to mount, particularly with the United States, gold has once again emerged as a safe haven for many countries seeking stability. So why, in particular, is China prioritizing gold now? And how could this move impact not just the U.S., but the entire global economy? China's love affair with gold is hardly a new phenomenon. Historically, gold has been viewed as a symbol of wealth and power, a timeless store of value that transcends borders and political fluctuations. In fact, gold has long been seen as a safe asset during times of uncertainty. But recently, we've witnessed an accelerated race among nations like China and Russia to accumulate as much gold as possible. Following the 2008 financial crisis, China's demand for gold skyrocketed, reflecting its urgent desire to bolster its economic resilience and reduce reliance on foreign currencies. In the wake of this financial turmoil, the notion that whoever holds the gold makes the rules gained significant traction, particularly among Chinese and Russian leaders. Gold is seen not only as a hedge against inflation and economic instability, but also as a strategic asset to assert control in an increasingly volatile world. This philosophy gained particular prominence amid rising global tensions, including trade wars, the conflict in Ukraine, and growing uncertainties over Taiwan. China, once again, found itself at the center of this new economic dynamic. According to the World Gold Council, China's official gold stocks now stand at approximately 2,280 tons, which is a record high for the country. Although this figure places China in sixth position among the world's largest gold holders, the nation's growing gold reserves have signaled a broader shift in its economic strategy. The United States, on the other hand, holds a dominant position with over 8,100 tons of gold, cementing its status as the world's largest gold holder. This disparity in gold reserves between the two economic giants sets the stage for a potential conflict, both economic and geopolitical. One key moment that sparked tensions between the U.S. and China came when former President Donald Trump imposed tariffs on Chinese imports, igniting a trade war between the two countries. In response, China unveiled a series of economic measures aimed at countering the United States' aggressive policies. This was seen as a declaration of economic warfare. As part of this broader strategy, China increased its gold stockpiles, sending a message to the U.S. and the global financial markets. The world's most populous country was preparing for a new economic order, one where gold would play a central role. The question then arises, why did China turn to gold in such a significant way? What does China's newfound enthusiasm for gold mean for the U.S. and the global economy? The answer lies in several key factors, including the growing uncertainties in global trade and currency markets. Gold is a timeless asset that can't be manipulated by inflation or devaluation. Unlike the U.S. dollar, which can lose value through overprinting or other financial risks, gold retains its value over the long term, making it a valuable hedge against economic volatility. In times of geopolitical instability, gold has always been a trusted resource to protect wealth and assets. Indeed, as the trade war between the U.S. and China escalated, investors turned to gold in increasing numbers. When President Trump announced fresh tariffs, the price of gold spiked, with spot gold rising 0.8% to reach $1,899 per ounce. The increasing global demand for gold came as a direct result of growing fears about the long-term effects of the trade war and the economic uncertainty it generated. As such, gold became the go-to asset for investors seeking shelter from the storm. As 2025 began, gold prices continued to show signs of strength. The precious metal's robust performance was driven by a combination of factors, including investor sentiment, ongoing trade conflicts, and China's increased gold reserves. For example, China's central bank added 330,000 ounces of gold to its reserves in the second quarter of 2023, signaling a clear commitment to building its gold stash as a safeguard against future economic disruptions. China's move to bolster its gold reserves was not only a strategic financial maneuver, but also a means to reduce its reliance on the US dollar. China's actions reflect a broader trend among central banks globally to increase their gold holdings. Many analysts, including those from Goldman Sachs, predict that gold prices could surge to $3,000 per ounce by 2026 as central banks continue to accumulate the precious metal. The increase in China's gold reserves also came after a 6-month hiatus, during which the country refrained from making major purchases due to record-high gold prices. As gold prices continued their upward trajectory, China resumed its gold buying spree, solidifying its position as one of the largest gold consumers and producers in the world. But China's gold strategy is not just about securing financial stability within its borders. It also has significant geopolitical implications. For instance, the recent discovery of the Huanggu gold deposit in China's Hunan province is a game-changer for both China's domestic gold production and its place in the global gold market. The Huanggu discovery is one of the largest gold deposits ever found, with an estimated quantity of 1,100 metric tons of high-grade gold. Valued at approximately $83 billion, this find could provide China with a substantial boost in its efforts to reduce its dependence on gold imports, especially from countries like Australia and South Africa. While the Huanggu deposit will not entirely eliminate China's gold deficit, it will undoubtedly alleviate some of the pressure caused by the nation's heavy reliance on foreign gold supplies. With China already producing around 370 metric tons of gold annually, accounting for 10% of global production, the Huanggu discovery will significantly strengthen the country's position in the global gold market. Beyond the immediate benefits for China, the discovery has far-reaching consequences for the global economy. For one, the announcement of the Huanggu find sent shockwaves through the global gold market, causing prices to spike and creating volatility in mining and financial stocks. The implications of such a vast gold deposit could reshape global financial dynamics, giving China greater economic sovereignty and reducing its reliance on the US dollar. This, in turn, could have major consequences for global trade, as China works to position its own currency, the yuan, as an alternative to the US dollar in international transactions. This shift has already been in the works for some time. Over the years, China has worked diligently to internationalize the yuan, and gold could be the key to further advancing this agenda. The country's growing gold reserves and its ability to produce gold at an unprecedented scale will only enhance the yuan's credibility as a global currency. By backing the yuan with gold, China could potentially reduce its dependence on the US dollar in trade and financial transactions. As the world watches these developments unfold, it's clear that gold will play an increasingly significant role in shaping the future of global finance. With the growing tensions between the US and China, gold could become a powerful tool in the struggle for economic dominance. The question remains, will the rise of gold in China's reserves mark the beginning of the end for the US dollar's status as the world's primary reserve currency? The growing trend of central banks, including China, diversifying away from U.S. assets and increasing their gold holdings suggests that the day of dollar dominance may be drawing to a close. As the world's largest gold producer and consumer, China's actions are shaping the global gold market, and the ramifications of its gold strategy will be felt for years to come. While the US dollar has long been the backbone of global trade and finance, cracks are beginning to appear in its monopoly, and gold could very well be the key to the dollar's eventual decline. In this new gold war, the stakes are higher than ever, and China may hold the key to reshaping the future of global finance. With its ever-growing gold reserves and newfound gold discoveries, China is positioning itself as a formidable player in the global economy, and the world's financial landscape may never be the same again.